All right, welcome back. Today, we are diving into a really powerful technique that you can use in pretty much any market. We're talking stocks, cryptocurrencies, you name it. It's called the Double Bollinger Band strategy, and it's all about one thing, cutting through all that market noise to give you a super clear, actionable map of what's really going on with the price. So, let's jump right in.
So, you know the feeling, right? Every single trader has been there. You're staring at a chart and it's just chaos. Prices jumping all over the place, and the big question is always, is this the start of a real move, or is this just random noise designed to shake me out of my position? Figuring that out? Well, that's the absolute key to being a consistent trader. And that's exactly where the Double Bollinger Bands strategy comes in. Now, this isn't about making your chart more complicated. Not at all. It's actually the opposite. It's about creating clarity. By layering two very specific Bollinger Bands, we're essentially building a visual map that carves up the chart into these super clear zones. And these zones tell you, right now, what the market is actually trying to do.
So, here's what we're going to cover. First, the core concept. Then we'll get into setting up the zones. After that, we'll look at two strategies, one for breakouts and another for riding the trend. And finally, we'll wrap up with the advantages and, of course, the limitations.
All right, so let's dive into the core concept here, which is all about building your trading map. I really want you to think of this less as just another indicator and more like a framework for your decisions. It's all about creating this simple visual guide right there on your chart.
And you'll be surprised at how simple the setup is. Seriously. Okay, so first step, you're going to add a standard 20-period Bollinger Band. But, and this is key, you'll set the standard deviation to 0.5. This gives you your inner band, which is great for tracking immediate momentum. Step 2, you add another 20-period band, but this time you crank the deviation all the way up to 3.0. This outer band is what maps out the real extremes of volatility. And that's it. That's the whole setup. But what's really powerful is what these two bands do when they work together. See, they don't just sit on your chart as lines. They actually slice it up into three totally distinct and really meaningful trading zones. And honestly, this is where the whole strategy just comes to life. So first up, we've got the buy zone. This is pretty simple. It's the area above that upper 0.5 deviation band. When you see the price hanging out up there, that's a really strong signal. It's telling you that buyers are firmly in control and the upward momentum is for real. Okay, then in the middle of it all, you have the neutral zone. This is the space between those two inner 0.5 deviation bands. Now, if you're a trend trader, this zone is basically your caution flag. When the price is stuck in here, it usually means the market is choppy, it's indecisive, or maybe an old trend is just running out of gas. Think of it as the wait and see area. And finally, as you can probably guess, we have the sell zone. It's the perfect mirror image of the buy zone. It's the area below the lower 0.5 deviation band. And when the price is living down in this area, that's a loud and clear sign that sellers are in charge and the downward pressure is strong. Okay, so we've built our map with the three zones. Now it's time to actually put it to work. Let's start with strategy number 1, the breakout. This one is absolutely perfect for those times when the market's been stuck, just moving sideways in a range, and it feels like it's about to make a big, decisive move. Now, the absolute key word here is confirmation. You're not just jumping in because the price poked its head out of a range. No way. The real signal is when you see a strong candle that not only breaks out of that range, but also closes decisively inside the buy zone. That's your signal to enter a long trade. And for your risk management, you just tuck your stop loss right below the neutral zone. And of course, the exact same logic just applies in reverse if you're looking to go short.
All right, on to strategy number 2. Riding the trend. This is for when the market isn't ranging, it's already on the move. And with this one, the zones are less about finding an entry and much more about knowing how to manage your trade. How to stay in a winning position and, just as crucial, knowing when it's time to get out.
And this is where it gets really brilliant for managing your trades. So let's just say you're in an uptrend, you're in a long position. As long as the price is staying up in the buy zone, or even if it dips down to the neutral zone for a bit, the trend is still considered intact. You just hold on. Your exit signal, your reason to get out, is when you see a strong, decisive candle that closes below the neutral zone. That's the market basically tapping you on the shoulder and saying, hey, that upward momentum, it's probably over. All right, let's take a quick pause here for a reality check. Because, look, as powerful as the strategy can be, it is so important to remember that no system, and I mean no system, is foolproof. You have to understand both its strengths and its weaknesses to really use it effectively.
So on the plus side, it is absolutely fantastic for filtering out that random market noise and giving you those really clean visual zones. And it's super versatile for both ranging and trending markets. But on the other hand, yeah, it can definitely produce false breakouts. Like any other tool, it's not perfect. That's why you absolutely must wait for that confirmation we talked about. And just keep in mind that how well it works can really vary from one market to another.
Okay, so let's boil this whole thing down to the key takeaways. Number 1, use 2 Bollinger Bands, one at zero point 0.5 and one at 3.0 deviation. 2, really get to know those 3 zones: buy, neutral, and sell. 3, if the market's in a range, wait for that strong breakout into the buy or sell zone. 4, if it's trending, use those zones to manage your trade and spot your exit. And number 5, and this is the most important, always confirm your signals and manage your risk. You know, this quote really captures the whole idea perfectly. The strategy can be applied to ranging markets as a breakout strategy or when assessing the momentum or slowdown of an existing trend. See, it's not a one-trick pony. It's a dynamic tool that you can adapt based on whether the market is being quiet and choppy or loud and trending. So, there you have it. You've got the map, you understand the zones, and you have the strategies. Honestly, the technical side of this, it's pretty straightforward. But the real question, the one that truly matters, is this. Knowing all the rules is one thing, but can you master the discipline to actually follow them, day in, day out, trade after trade? Because that's what separates a good trader from a great one. So the final question is, how are you going to build that discipline?